the half, and that's significant. And so while we've been for sale, the largest sell imbalance in the history of the New York Stock Exchange, I've been here for 41 years, we had $12.5 billion for sale all afternoon, but the market did not want to break. It broke a little at one point, but we are going to close at highs, and that's significant. That means that they love the market. The enthusiasm's here. Go Knicks. Go NYSE and
well,
go.
Speaking of love, I love Peter Tuchman. I'm going to hold you for a few minutes after the bell. We're going to take the closing bell now. The team from First Carolina Bank to do the honors. More taking stock after. Do it. The markets are high and the New York Knicks are still world champs. Your final tail of the tape on this Thursday, June 18th. I almost said Friday. It feels like a Friday. Of course, the markets are closed tomorrow in observance of the Juneteenth holiday. On this Thursday, the S&P 500 up 1%, the Dow up fractionally, the New York Stock Exchange Composite Index up about 0.1%, while the small caps, look at this, Peter Tuchman. The small caps best of the bunch up 2.1%. Come back in here, and so I always like learning from you and talking to you in these moments because you get a sense of the order book. You see things that a lot of people on the outside don't see. Yeah, kind of had us. I was seeing you throughout the day today. You had a lot of enthusiasm as we head into the closing auction. Talk to me a bit more about what you saw in today's tape.
Okay, so look, the volume that comes in for the closing bell. Our largest auctions are the open and the close. Especially on days like today where there's an S&P rebalance, a Russell reconstitution, you get to see where the volume is. And look, bottom line is 12 billion for sale did not let the market break at all. That means that people are, look, first of all, there's some short covering. Secondly, there's just enthusiasm around the market. Thirdly, people want to close out their quarter at the high highs, right? We've been trading at record highs for months now, right? We've had a couple of breakdowns, but for the most part, people are putting money to work, and they're going to put their money to work on the closing bell on the last day of this quarter. And so that leaves us with, and also the day after Fed Day is where the market really tells you what its sentiment about the Fed meeting, right? Whenever you're confused, look at what the market is telling you. They like the market. These are just not numbers. These are massive thresholds and landmark numbers. Dow 51,500. I mean, whether it's a record or not, it's surely spectacular. The S&P 500 here is just shy of its record highs. And so these are real numbers, real money being put to work. People are loving the market. That's the bottom line.
And we talked about how much enthusiasm there is. Why do you think there is so much enthusiasm despite Iran conflict challenges, despite inflation challenges? If you are a bear positioned in your portfolio, you have a long list of arguments as to why the market should not be going up and to the right.
If you are a bear, I would imagine you are probably in a lot of pain now because you can. It's going to be hard to actually go up against the irrational enthusiasm of the market that's been continuously going up. You've got to reevaluate your position. The market is telling us that we're liking everything we're seeing. Will the conflict be over eventually soon? Probably. Do we feel that some of the numbers, the way the bonds are trading, the 2-year and the 10-year are telling us that maybe inflation has peaked? That's something that came out of yesterday's speech. If that's the case, then it's time to buy this market once again, right? Because all of the things that have really been that have sort of capped, I mean, I don't know how we can say capped, because the market's trading at a new record high every day.
Yeah.
But all of those things we're checking off all the boxes, right? Inflation maybe have peaked out, right? We know that maybe oil and the confrontation has peaked out. And so at that point, all we're left with is the lifeblood of the market, which are earnings. And more than 80% of the S&P have done it. And you know what? People are buying the market. They're buying everything. Have there been times where we broke down versus chips and software? Yes. But we've seen those bottoms. It feels like we've etched in any of the short-term bottoms that we've seen over the last couple of months, and that people are feeling strong and confident to keep buying this market. All we have to do is think back to last year, February, March, and April, right, where we had that quick reversal. Mr. Trump said, enough with the selling, let's buy. They reversed the market, and we spent the rest of the time going up. My gut is, I mean, I'm not going to tell anybody where we're going from here. But you're seeing these moves. These are real numbers, real money being put to work.
Oh, yeah.
And so it's telling me that the retail, institutional, mutual fund community The ecosystem is telling us that the market feels strong.
And maybe with some dose of irony, because the old Wall Street adage, sell in May and go away. What happened to selling in May? What happened to going away? Here we are.
Sell in May and go away has not really been something that's worked for a while.
Yeah.
You know, we're in mid-June. That didn't work, sell in May and go away.
Yeah.
And then there's sort of this frothy mode in June. Right, you know, you can tell if a market feels frothy. Yes, this is a crazy high valuation that we're at for a while, but the way we're built, look, you know, there's this great thing called the trend trade. The trend trade is when the market's going in one direction or not, it pulls back to certain support levels and then continues to go higher. That's what we're seeing here. We're seeing these pullbacks. They're healthy. And we've seen it across the board. We're seeing it with a lot of different indices. And then we feel strong and confident to go higher.
Peter Tuchman, very grateful for your time, for joining us very last minute here on a Friday. Let's go Knicks. How about that parade today?
Let's go Knicks to the moon. Let's go.
Unbelievable parade
One
today.
more time next year.
We'll run it back. Peter Tuchman, thanks for being here. Jeff will head this way. We'll bring our viewers the latest on a poly market check, more than $3.5 million in total trade volume on the event contract for largest company by market cap by the end of 2026. 71% odds. It is chip giant NVIDIA, 15% odds Alphabet, 10% for Apple, 5% for new entrant to the IPO space, SpaceX, 1% chance for both Microsoft and Tesla. NVIDIA, of course, currently the largest company in the world by market cap, more than $5 trillion in market cap. SpaceX currently 6th largest, currently at $2.4 trillion. We'll take a look at one stock that calls the New York Stock Exchange its home, and it's having a nice day today, up 2.3%. One of the best performers in the Dow is, of course, Nike. Barclays analysts just this morning reiterating this retail giant as overweight rating. They say we are sticking with the stock for the long-term opportunity and the overall turnaround story for a very beleaguered and beaten down stock. Shares of NKE down 30% since the start of 2026. Elon Musk may have all of the headlines, but did you know that actually one startup right here in New York City is implanting more brain chips than even Neuralink? Cheddar's own Chris Castellino has more.
Somewhere in the brain, a thought forms, an intention, a command. For most of us, what follows is automatic. But for the nearly 400,000 Americans living with severe paralysis, that signal stops. The body doesn't answer until now. What you're seeing here is thinner than a strand of human hair and contains over 1,000 microelectrodes. It may be one of the most consequential pieces of medical technology ever created in New York City.
Our approach involves putting a very, very thin array that sits on the surface of the brain without penetrating into it.
In this episode of NYC Innovates, we'll explore the science of brain-computer interfaces. We'll take you inside the lab where this groundbreaking technology is being developed and address the question, if a device can read your mind, who owns what comes out of it?
We're now implanting roughly one person per week or a little bit more than that.
Stay with us. A brain-computer interface, or BCI, is exactly what it sounds like, a direct link between the human brain and the digital world.
Thought has a physical representation. So when you have an idea or recall a memory or have an intention to move, there is actually a physical representation of those thoughts in the real world, and they are electrical.
The earliest BCI research dates to the 1960s. For most of that time, BCI lived entirely in research labs and wired to bulky hardware. But it was a landmark 1998 experiment when a paralyzed patient named Johnny Ray became the first human to control a computer cursor using only his thoughts. That showed the world this technology was more than just theory.
What a brain-computer interface does is it records those electrical signals at their source. It then digitizes them, so it converts the biological signals into digital bits, and then it transmits those bits to an external computer in order to drive a function.
Michael Major is the co-founder and CEO of BCI developer Precision Neuroscience. The company's co-founder, Ben Rappaport, previously helped start Neuralink with Elon Musk, but he had a different vision for how this technology should work.
In order to reach the full potential of the technology, it needed to have three core attributes. One is it had to be fundamentally safe and non-damaging. Two is it needed to be reversible and upgradable. And three, it needed to be really high bandwidth, which enables a high degree of performance and function. And Precision System is the only one within the BCI context that combines all three attributes in one system. For people who have generally been rendered homebound because of their illness or their injury, being further isolated by not being able to control a phone or a computer or a tablet in the way that most people take for granted means that they're even more isolated. It means it's very, very difficult to maintain contact with friends and loved ones. It's hard to access news and entertainment, and it's basically impossible to have a job. So our goal at Precision is to enable people to regain control of a digital ecosystem, ultimately so that they can, if they want, go back to work.
This is Precision's Layer 7 cortical interface. It's almost impossible to hold without wondering how it was made. It's roughly 25 microns thick, which is about a quarter the width of a human hair.
It's incredibly thin. On this side of the array, we deposit 1,024 tiny platinum electrodes, and this is the part of the system that actually sits on the surface of the brain. Because it's so thin, it naturally conforms to the curvature of the brain. Each of the electrodes then has a physical wire, and the wires all get routed out in different ways and through this ribbon cable. So it looks like a dark part of the array. It's actually 1,024 tiny wires, each of which are only 5 microns apart from each other. And if they touch, the whole thing shorts out and it doesn't work. So you have to be incredibly precise and careful in the manufacturing. The wires all end here on a bond pad. That gets bonded to electronics, and the signals pass through and get digitized and amplified and eventually transmitted wirelessly to.
Welcome back to this Thursday edition of Taking Stock, live from the trading floor of the New York Stock Exchange. Amber Subramanian joins us now. She is the CEO of CIPO, a crypto market data company. Really nice to have you and welcome you to the exchange.
Thank you for having me.
Of course, I'm going to ask you to hold up the microphone if you don't mind. I really want to get your sense on not just SpaceX shares. We've talked so much about SpaceX the last week, specifically tokenized SpaceX shares. What are investors actually buying when they trade on these type of products?
Yeah, absolutely. So specifically in the context of SpaceX, there were 3 different ways to get exposure as a retail investor. You either had the pre-IPO prediction markets, which was a very interesting aspect of how do we price ahead of the IPO. You had the actual prediction markets on the price of SpaceX and where that would price at IPO and after. And then you had the actual tokenized stocks. Tokenized stocks were initially planned to be listed on crypto venues through X stocks, and a lot of them had raised capital to be able to offer trading for SpaceX shares as tokenized X stocks. Unfortunately, most of them did not get an allocation into the IPO and had to refund their investors. And that is a really interesting thing where it's not the technology or the crypto part that failed, it's more just getting access to the actual underlying.
So in addition to that, and I find this interesting, analysts from CIPO have said it was actually the world of crypto that better priced SpaceX before Wall Street did. What does that mean, and what did the data actually reveal? So
the data revealed most of the crypto exchanges have listed pre-IPO perpetual future markets, which all of them kind of converged around $160 per share, somewhere between $160 and $200. That was pre-IPO, a couple of days leading into the IPO, whereas the original IPO price was about $130, and then very quickly into the day converged back up towards $157 and then $160. So it's really interesting that the kind of prediction based on the derivatives instruments on crypto native exchanges actually kind of was a very good indicator of where the share price would trade that day.
So to that point, some contracts traded well above $2,000 before ultimately settling much closer to $160. People will see that discrepancy. They'll wonder, is this simple price discovery, a bit of speculation? What do you see is going on here?
So this is more of a technical thing. This was before a stock split happened. So initially, Binance had not listed their pre-IPO perps, whereas other exchanges had, and it was before a stock split. That was adjusted then, and the day the stock split was announced, all of the contracts kind of converged towards $160, and that kind of repriced quite accurately. The interesting fact is that SpaceX announced another share capital increase of about 500 million new shares, and the perp contracts also adjusted for that new dilution, which shows a level of sophistication from the investors and kind of the markets behind those perps, pretty sophisticated.
What does the hyper-gamblerization of everything actually mean? Do you see this as truly being the future of finance? A bit of a red flag, maybe? I know that was something that your team flagged for us.
Yeah, I mean, we said the hyper-gamblerization. I like that term. One of our analysts said that. It was really referring to how crypto retail investors trading on those perp markets have very accurately priced where the actual Wall Street prices would land. And so, is it gambling when you're trading crypto perps pre-IPO and prediction markets? I would, you could debate that, but clearly it was a very accurate retail prediction.
It's a fascinating time. We've got these newly emerging financial instruments hitting the market in real time, a combination of this, a combination of that, all market participants trying to figure it out as we go along. I'm very grateful for you joining us to help us make sense of it. Amber, nice to see you here today.
Thank you so much. Amber
Subran, CEO of Kaiko. Don't go anywhere. A lot more Taking Stock coming up on this Thursday edition of the show, live from the big board. Very good. Awesome. Well done. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and AI as you head into your long holiday weekend. First up, the crypto majors under pressure for the day. Bitcoin and Solana both down 2%, ETH down about 3%. Next up, CME Group suing the CFTC. It's a big one after the regulator approved crypto perpetual futures. We were just talking about it with Amber, arguing the highly leveraged, never expiring contracts should be regulated as swaps rather than futures instruments. Finally, Amazon in talks to sell its Trainium AI chips directly to other significant and major data center operators, expanding beyond AWS in a bid to challenge NVIDIA's dominance in the fast-growing AI infrastructure market. The New York Stock Exchange's very own Ashley Mastronardi sat down with Visa's regional president for North America, Kim Lawrence, at the Visa Payments Forum in the city of San Francisco to discuss the ways that Visa is integrating AI and, of course, much more. Take a look.
The Visa Payments Forum is underway in the heart of San Francisco, where Visa says it's making its mark in the digital commerce space. Joining me now to share more is Kim Lawrence. She is Visa's regional president for North America. Kim, so great to see you.
Thanks so much for having me. I'm excited that you all are here with us today.
All right, it's a big day for Visa. What do you want people to take away from this forum?
Yeah, so we've covered a lot of ground this morning and throughout the afternoon. Lots of future activities that are taking shape right now: agentic commerce, stablecoin, some of the future sounding things. But many of our clients and partners that are here with us today are also really focused on, getting it right day in and day out. As we talked about today, it's sort of getting the basics right. So if there's one thing that I hope that everyone takes away, as with Visa as their partner, they can rely on us to kind of chart a path into the future and help them with getting the basics right day in and day out. So just really to put us to work for them.
And I understand this is an invite-only client event. 2,000 clients are here. Who are your clients?
Yeah, it's a great question. We have just over 2,000 clients here with us. The biggest event we've had so far, and it's global in nature. So we have North America clients from US and Canada. We have Asia Pacific, Latin America, and the Caribbean are here as well. And our clients make up a broad array of payments players. So everyone from financial institutions who issue Visa credentials, merchants who choose to accept them, their acquirers, processors, fintech, tech partners, and the list goes on. So a very expansive group of folks here with us this week.
The pace of payments is changing rapidly. How are you helping your North American customers manage this moment?
Yeah, it really is. I mean, the conversation this morning with some of the keynote speakers talked about, this isn't like one or two big things happening in the world right now. It's like 6, 7, 8, 9 of them happening all at the same time. And so what we're really here to do is help ensure that clients have services and solutions that they need to really lay the foundation, ensure that the ecosystem is safe, secure, reliable, what they've come to rely on from Visa for so many years, and then help them chart their strategies as they move into the agentic space. They work with AI tools and explore what they're doing with stablecoin.
You've mentioned AI, you've mentioned agentic technology, AI agents. What are they and how are they going to be transforming the payments industry?
Well, the real question is when, and who knows when, who knows how, really. But I think, looking at what AI is doing, transforming everything we do, right? We used to just search for things on the internet, and now it's much more about giving us answers. The way we're discovering everything from learning to shopping has changed over the past couple of years. And agentic is really the concept of, me giving agency to technology to go shopping on my behalf or to do things on my behalf. So who knows exactly when that's going to get sorted, but what we're working on right now is how do we make that work? How do we make sure payments are embedded in that? How do we make sure security and safety is a critical piece of that? And, customers start getting comfortable with it.
You mentioned Gen Z in your keynote earlier. What are their shopping habits like, and how do you think they will impact the payments industry?
Yeah, so it's really interesting. One of the things I talked about was the fact that, Gen Z, in many ways, they look and they're starting to act just like, I'll say myself, Gen X did 30 years ago. And so, one of the key things that we see in, the next generation coming up through payments is their love and appreciation for debit, right? Debit is usually the entry product that, people get used to paying with. And 81% of Gen Z customers own a debit card and they use it for everything. They really like debit. And, if history repeats itself, which it typically does, we expect that, as Gen Z gets older and they're employed and their wealth starts to grow, they'll start to shift from debit to credit just like generations before them have.
Kim Lawrence, Visa's regional president for North America, thank you for joining us.
Thanks so much for having me. Really appreciate it.
back. All right, time for a few headlines in the world of startups, raises, and rounds. First up, AI startup General Intuition raising $300 million at a valuation of more than $2 billion, using video game clips to train AI agents to navigate and interact with the physical world. Next up, Critical Energy. It's a startup founded by a former engineer from SpaceX, set to raise $22 million to build rocket-inspired turbines designed to speed up the development of geothermal power plants. And finally, Ripple-backed Flutterware reaching a $3.2 billion valuation as the company expands cross-border payments and digital asset services across Africa. And now Scarlett Sieber is back with a whole new edition of Hindsight 2020. That's where she breaks down important dates in financial history. Take a look.
Welcome back. I'm Scarlett Sieber from Money 2020, and this is Hindsight 2020. Let's rewind back to June 21st, 1999. The NASDAQ reaches its peak before the dot-com crash. Valuations soar. Cash flow becomes optional. Narratives, they outrun the numbers. At the time, the story is, this time is different. In hindsight, we all know it never really is. The dot-com peak teaches a durable lesson though. Technology can change everything, but that math still be mathin', and it still applies. When expectations detach from fundamentals, corrections aren't just possible, they're inevitable. Fast forward to today. AI, crypto, frontier tech, and the tension, it feels very familiar. Innovation creates opportunity, capital creates pressure. Reality eventually reconciles both of these together. June 1999 isn't a warning against technology, it's a reminder about discipline. And with that, that is your Hindsight 2020, because cycles change, but incentives, they don't, and people still be peoplein'. With that, back over to you.
Tomorrow, we will be closed in observance of the Juneteenth holiday next week here on Wall Street. Not a lot to go through in terms of quarterly results, though we will get the latest earnings calls from Carnival and FedEx on Tuesday, and tech giant Micron set to report on Wednesday. In the world of data, PCE inflation print for investors to digest, crossing the tape next Thursday, and the latest figures on consumer sentiment from the University of Michigan next Friday. A very happy Father's Day, one and all, to all the dads watching. The best for the long holiday weekend. Thank you for watching today's edition of Taking Stock. Let's go, Knicks. Have a good weekend. We'll see you Monday.